typically, as we head into a Fed meeting, we sort of try and parse through what the key themes would be for that. But I guess we have to talk about the bigger Fed story, which is who heads the Fed next. Help us understand, what would be your first trade if you hear that Powell gets the nod, and equally if Taylor gets the nod?
Well, on a knee-jerk, I would say that the dollar will weaken in the case that Powell gets the nod, simply because, the two candidates that we are talking about, they are very different. Powell is really, what market thinks to be a continuity or continuation of what Yellen has been doing, although in my view, he is at the margin more hawkish than Yellen. Now, in the case of Taylor, it's a clear hawkish move. Taylor's rule would suggest that interest rate should be at 4% right now, not 1%. So it's really a contrast in the way monetary policy is managed between the two. One is a model-based monetary policy management, which has to be hawkish from current view, and the other one is more macro-based.
Nizam, the market's trying to get its head around the direction for 10-year U.S. yields, and the chart on the Bloomberg tells the story a little bit. Dive into it with me here. GSpace hashtag BTV Space 3987 is your key code. The question being whether these treasuries are topping out. We've hit 2.47% twice in the last few days since October 24. The folks at BMO Capital Markets are saying, look, this double top technical pattern means that we are open to a retest of the 200-day moving average at 2.312%. More downside then for those yields, Nizam, before we go up?
Well, that's a very short-term chart. Now, if you look at the longer-term chart, then there was a break of 2.45, 2.42 resistance, and a lot of people are talking about the next resistance or the next target at 2.65. I'm more into the longer term, and in my view, the tax reform could actually still push yields higher, regardless of who is in charge of the Fed. Now, who's in charge of the Fed is probably more relevant for the short end of the curve, and therefore the slope of the yield curve will be more important. In the case of Taylor, I think the curve will flatten, which may mean that the dollar will strengthen across the board. But I think in the case of Powell being given a nod, then the yield curve could steepen. The dollar will weaken against G10 currencies, I feel. But for emerging market currencies, it's a bit of a toss-up.
And as we just heard a few minutes ago from Mark Mobius, who essentially said that, well, when you look at EMFX, he expects that to strengthen further. Is it possible that, as yields go up, we still get a bid across EMFX?
Yeah, why not? I mean, if you think that yields can only go up from here, I mean, simply because the US rate was at 0.25%, for example, it cannot go any lower. And therefore, the simplistic view that when rates are being raised, stocks will fall and emerging market currencies will weaken, I think that's too simplistic. But that view basically means that there's only one direction for stocks and for the currencies. It cannot be the case. Now, in an early stage of tightening in the US, especially driven by decent growth, then I think there is still room for EM to appreciate.
Nizam, what are your top conviction trades? What are you passionate about currently?
Right. I mean, it's a bit tricky to trade outright against the US dollar, given all the political uncertainty, policy uncertainty, Fed uncertainty as well. So for me, I think for emerging markets, it is best to trade in relative value terms these days. For me, I'm looking at the Sing dollar against Korean won as one potential short trade. I want to go short the Sing, long the won. The other one that I kind of like is actually going short the Thai baht and long the peso, simply because of the difference in capital import patterns. So if you look at the trade data, which was just out for Thailand as well, basically it may suggest that we could see a change, a contrast in trade patterns between the two, where Philippines may start to reduce its imports of capital goods, while Thailand, where they are just beginning to see an upturn in investment, could see a surge in capital goods imports. To that extent, Thai baht could weaken, the Philippine peso could strengthen. So those are the kind of relative value trades that I'm looking at right now.